Breaking news from the crypto world, Jpmorgan's latest move is causing a stir. With the Bitcoin halving event just around the corner, Jpmorgan analysts Reginald Smith and Charles Pierce foresee significant impacts on the mining sector. As the block reward halves, they anticipate a shakeup, potentially leading to consolidation and closures. Despite these challenges, historical trends suggest post-halving price appreciation. Stay tuned as we navigate this dynamic landscape. Don't forget to subscribe, like, and share, and let's start. So what do we have here? We've been emphasizing for a while now that efficiency is the key metric in such aspects of our business. Fleet operations and capital appreciated noted by Jpmorgan and CleanSpark is the best prepared for the upcoming Bitcoin halving. Bitcoin has formed a major ascending triangle right around the current all-time highs, breaks 71,500 and the market takes off hard, bring on a more than $80,000 price. $1.2 billion worth of Bitcoin shorts will be liquidated at $73,000. That's really great. The Bitcoin breakout has a target above $85,000. This is what we have. New BlackRock launches massive Bitcoin ETF advertisement on the Bloomberg homepage. IB took $15 billion in 3 months and they want more. Another day, another reminder of Bitcoin's gravitational pull on the crypto space and especially alts. Remember, like it or not, Bitcoin is the maestro, altcoins merely follow its lead. Stay vigilant, folks, and don't let the symphony of gains blind you to the underlying dynamics. Bitcoin dominance cycle. Bitcoin dominance goes up, Bitcoin price goes up, alt price lateral goes down. If Bitcoin dominance goes up and the price of Bitcoin goes down, the alt price is going down. Bitcoin's dominance goes up, Bitcoin price lateral goes down, the altcoin's price. Then we go for the price of, the dominance of the Bitcoin going down, the Bitcoin price goes up, and altcoin price goes up. When Bitcoin dominance goes down, the Bitcoin price goes down, alt price is going lateral or goes up. And if the Bitcoin dominance goes down, lateral Bitcoin price and the alt price goes up. That's how the market works. The breaking news says China big banks likely to buy Bitcoin. Hong Kong is set to approve spot Bitcoin ETFs next week, reports indicate. Justin, BlackRock, and Fidelity have increased their spot Bitcoin ETF holdings to a combined total of 418,367 Bitcoins worth almost $30 billion. Exactly 11 years ago, the Bitcoin price dropped 60% in a single day. They called it the Great Crash of 2013. Everyone who hodled is up 70,000% from that exact moment. Just in Wall Street firms with a combined $15 billion in AUM bought exposure to Bitcoin ETFs in Q1. This is just the beginning, and all I'm saying, it's probably going to be way more than that in just a short period of time. Hold tight, 69% of Bitcoin holders are in it for the long haul, keeping their Bitcoin for a year or longer. With the halving just 8 days away and exchange supplies falling, a supply shock is imminent. Bitcoin holders time held. Bitcoin ownership distribution by time held full addresses. 69% more than 1 year, 24% from 1 to 12 months, and less than 1 month is only 7% holding their dominance. Bitcoin halving event could be a potential game changer for mining industry, Jpmorgan says. So what happened? A report by analysts Reginald Smith and Charles Pierce highlights the potential implication of Bitcoin halving event, which will reduce the block reward for mining new Bitcoins by 50%. This reduction could lead to a wave of consolidation and business closures within the industry, while potentially benefiting the remaining operators. The industry's gross profits, currently estimated around $2.5 billion per quarter, are projected to decline by 30 to 40%. The network hash rate, a measure of the computational power dedicated to mining, could decrease by as much as 80 exahashes per second or 13% from peak to trough. Historically, Bitcoin has appreciated significantly in the months following halving events, although not immediately. Also, the current market conditions may differ from previous cycles. So why it matters? The halving event is a crucial part of Bitcoin's economic model designed to regulate the rate of new Bitcoin creation. With the block reward halving every 4 years, Bitcoin price have rallied post-halving events due to the reduced supply, more efficient miners, and increased demand. Among the companies covered, CleanSpark is considered the best positioned due to its efficient mining fleet, low all-in mining costs, and favorable hash rate comparisons, which should drive record revenues and profits post-halving. Conversely, Cypher mining is viewed as the worst positioned in the near term, despite having the lowest energy prices due to tough hash rate comparisons and relatively high overhead expenses, which will weigh on revenue and profit growth. What's next? So the influence of the meme coins and Bitcoin as an institutional asset class are topics expected to be thoroughly explored at Benzinga's upcoming Future Digital Assets event on November 19th. The next stop, according to analysts, Bitcoin halving may start a rise in Bitcoin ecosystem tokens. Here are the details. As the cryptocurrency community eagerly awaits Bitcoin's upcoming halving event, analysts are predicting potential gains for related networks and ecosystem tokens, including Rune, Stacks, and the meme coin Ordi. After the halving, all eyes on Bitcoin ecosystem tokens Rune, Stacks, and Ordi. Investors are monitoring both tactical and meme coin projects, expecting the bullish momentum after the halving. The halving event, scheduled to take place at the end of this month, will reduce the rate at which new Bitcoin coins are produced, effectively reducing the new supply available. Historically, this event has heralded a bull market for the flagship cryptocurrency. Market participants are actively seeking opportunities to benefit from evolving narratives in a bullish environment. As attention turns to the Bitcoin ecosystem, investors are expecting to increase in investments. Wintermute's ODC desk highlighted the existence of a significant pool of untapped capital in the Bitcoin ecosystem, underlining the potential for listed assets such as Rune, Stacks, and Ordi to benefit from capital rotations. The next one we're going for, the pointer is reversed in Grayscale's Bitcoin ETF, outflows reduced significantly. So the Grayscale's Bitcoin Exchange Traded Fund ETF witnessed a significant decline in outflows on Wednesday. It was a record low of around $18 million, marking a notable departure from its usual outflow amount since its launch in January. Grayscale Bitcoin ETF paused lowest daily outflows of $18 million amidst fading selling pressure. This latest development comes just a day after Grayscale CEO Michael Sonnenschein stated that he expects outflows from the Grayscale Bitcoin Trust to reach a state of balance. Sonnenschein suggested that sales activity associated with deals from bankrupt crypto companies like FTX has greatly diminished. Analysts at Coinbase Institutional suggested that a recent surge in GBTC sales may be due to, in part, of Genesis selling shares as part of its bankruptcy proceedings, and the GBTC product has experienced a significant Bitcoin outflows totaling approximately $15 billion since its inception, contributing to continued selling pressure on the asset. And notably, the Grayscale Bitcoin ETF charges the highest annual fees among its peers, charging 1.5% of assets compared to a low of 0.19 for Franklin Templeton's EZBC. That's all the information we got for today's video, so don't forget to subscribe, like, and share. See you in the next one, and peace.